Nathan Rector with Canopy Mortgage here. You need a second mortgage to pay those bills off, such as your credit cards, do some home improvements, because you don't want to touch your first mortgage. So let's dive into what's called a HELOC or HELOAN. HELOC, a home equity line of credit. A HELOAN is a home equity loan. The difference between the HELOC and the HELOAN is the HELOC is a credit card type on your house. It's a second lien now. So if you got a great first mortgage and you don't want to touch it because you're at 2 and 3% or even maybe 4%, but you need some cash of that freed up equity that's currently in your home, then a HELOC or a HELOAN will be the best option for you. So the HELOC is like a credit card. The HELOAN is a fixed rate second on your home. The interest rate's a lot higher because it's safe, it's there, it's fixed. Where the HELOC, it moves with the prime rate. So every time the Fed moves that interest rate, prime rate up or down, that rate moves up or down. But the HELOAN is you got to take out all that equity that you want and pay it back. Where the HELOC, the line of credit, you can open up for $200,000 and only pull out maybe 100, or you open up for 100 and you only pull out 50. Where the HELOAN is, if you want 50, you're going to take the 50. That is the big key difference. There's no prepay penalties on these things. Some of them do come with like an early closure fee, a very minimal fee, but it's not a prepay penalty of years past. So if you got a great first mortgage right now, just a great rate, and you do not want to touch that interest rate, but need that cash for school, kids going off to college, you were going back to school to get a specific degree, pay off the high interest rate credit cards, pay off some, when you bought the home, you went wild on your credit cards and financed all your home improvements and your landscaping and whatever you did to the house. A HELOC is a great way to transfer that high interest debt onto a lower line of credit or a HELOAN. So my name is Nathan Rector with Canopy Mortgage. I'd love to connect with you. If you got a great rate on the first mortgage and you do not want to sell and you want to stay in your home, but need to pull out some of that freed up equity from your property, call me. Let's talk. I'm licensed in California, Arizona, Nevada, and Utah. Let's talk about a HELOC or a HELOAN. Pull some of that cash out of your home. Leave that first where it's at. Take that cash out. Pay off those high interest rate credit cards. And maybe do some home improvements that you're looking to do, such as adding a pool or solar or a new kitchen or new bathroom. Use that equity in your home if you want to, and pull that equity out and do those various things. But let's talk. Just make sure this makes sense to you. If it doesn't make any sense, let's not do it. But if this is going to save you tons of money, transferring those high interest rate credit cards to a lower line with a lower interest rate, by all means, you need to do that. You need to explore that. My name's Nathan Ruffey. I'm here at 909-503-5600 to talk to you about one of these HELOCs or HELOANs, second lien on the property, leave that first mortgage alone. And if we need to redo the whole first and take the cash out, we'll explore that as well. But I'm here to have a conversation with you and talk to you about, see what's the best option for you, pulling some equity in your house. Doesn't hurt to have a conversation. Call me, text me, or email me. All my contact information is below. And Nathan Ruffey with Canopy Mortgage at 909-503-5600. And I look forward in connecting with you.